In this video, I wanted to talk about the pros and cons of rental house investing. Now, there's different ways to go about it. I'm going to share some of the things that made a big impact for me, and hopefully that will help you as well, because there are some obstacles, but I got some good advice early on, which helped me greatly, and that's what I'm going to share with you here. Now, as many of you know, I'm a third-generation real estate investor, and back in the 1990s, I would manage my parents' rental house portfolio, and I did everything. I took care of finding tenants, handling rents, paying mortgages, repairs, move-outs, get-readies, marketing, everything. And it was a great experience because I wanted to have my own rental houses and have my own portfolio, which I ended up having, and then I managed those as well. And like I said, what made a huge impression on me was some of the early advice I got from some of the best real estate minds at that time, which have not been eclipsed, by the way. Many of the mentors that I had, that my father had, because we were lifelong learners, I continue to learn, we got some really good advice. So it can be very simple, and that's what I like about it. First and foremost, some of the pros of course, having rental house property are potential tax advantages and wealth buildup, because you've got tenants theoretically giving you the money for rent that then you are making the loan payments for it if the loan is still on the house. Now, over time, will that loan still be on the house? Will you sell some properties to pay off other properties? That's totally up to you. But it's a long-term play. So it's one of those types of things that a lot of people think of real estate as, okay, I'm just going to make all this money fast. And certainly there are different strategies with that in mind. But when it comes to holding on to rental property, that's a long-term play. That's something you're holding on to over time. You're having tenants pay down those mortgages for you as you are using the rent towards that. And then maybe you're collecting some more properties, you're raising some rents. Maybe you're selling off some of the properties that you're not as interested in. Maybe you've got some equity in those, and you are then rolling that into other properties with 1031 tax-deferred exchanges, things like that. That's part of all the options that you've got, which is really nice to have. Now, the government is the one that makes the rules when it comes to taxes, and of course, taxes always change. So when it comes to tax advantages, I'm not going to even mention what they could be. First of all, I'm not an accountant, but second of all, things change. But as I'm making this video, there certainly are some. And when I mentioned the 1031 tax-deferred exchange, that's another one. Now, when you've got properties that are appreciating, that can be a nice thing. If they are having a market cycle down and you're thinking, oh my gosh, I've got to jump ship, well, sit back and again, reassess what your long-term strategy is. Are you looking to have these properties forever and then have income being produced by rent because you've got some free and clear properties? Well, theoretically, the prices can be here. If you're not selling it, but they're cash flowing nicely, that can be a good thing, right? And it's also a way to even your keel as the market is doing things that are emotionally hurting you and you're seeing things on the news and things like that. Look to see what's going on in the market over several years. Are things going to mellow out? If you were in the market for a bit longer, is that going to be a good thing when it comes to the long-term play? Again, I don't have a crystal ball, but it's important to know that this isn't a short-term play. So what's going on in the short term, that's not as impactful potentially if you were to not sell as what's going on in the long term. It's just like stocks. And when the market, because of something, crashes and people get out, well, then they're hurt by that. But what happens when it goes back up? What happens to the people that didn't sell? Well, chances are they're doing okay. So anyway, when it comes to rental house properties, there are some pros and there are also some cons. And a lot of times, if you are managing the property yourself, the con is a bad tenant. Somebody who isn't paying on time. They're not taking good care of the property. It's an issue. And if they just stop making payments altogether, they're always late, things like that, that dramatically impacts your experience as a property manager for your rental property portfolio. So the advice that I got years prior to ever having my own rental houses was the screening of the tenants. why it's so important and, how it impacts everything when it comes to this long-term play real estate investing strategy. So what I was taught was, of course, you're screening well. You're doing what you need to be doing in order to know, is this person somebody that's going to be making the payment on time? So you're checking the credit, you're checking a lot of the different things that you can nowadays that are legal to be able to check so that you can determine, is this person going to make the payments? Is this person a good risk, right? So once you've screened somebody and you realize that, and you've actually chosen somebody that is going to be the tenant, well, then what you need to do is you need to educate them. Now, I can tell you firsthand, whenever you are talking to a tenant, both when you're showing the property, when you are putting the agreement together and they're right there, they're going to be smiling, they're going to be kind, they're going to be nicer than they've ever been to you. That's what I've always experienced, and just realize that this is something that is important to them. So they're putting on their best front for you. Not to say that they're not nice, that they're not good people, but it's just something that I've experienced over the years. And why that's important is we have to remember that this is a business and we need to let these people know our expectations. And the expectations are written up in the contract. And you need to go over that. It's not just you're moving in, take care of the property and some of the 30,000 view kind of stuff. The things that I was told in the beginning that made such a dramatic impact with me was not only screen properly, but also to give some kind of a rent credit, quote unquote, so that when people pay you before the first of the month and when they take care of minor maintenance, they're going to get a discounted rent for that month. So in my case, I often would give them a $50 incentive if they paid me before the first of the month. So that rent could be $50 less, and any maintenance up to $50 in a month, the little stuff, they take care of. So they don't call me. And I let them know. I say, look, I'm not trying to say, don't show me anything that's wrong in the house. I want to know what's wrong that's big because I want to take care of it, not only to take care of the house, but also to preserve your quality of life within the house during our agreement's term. That then lets them know they can let me know about things. But when it comes to the little stuff, and I let them know, look, if you've got a sink that is a problem, if you've got a toilet that's a problem, I don't want to be called at 12 midnight about a clogged up toilet. I'm sure you can appreciate that. And for that luxury of not having to have me come over, I'm going to give you a $50 rent incentive that if you take advantage of this every single month and pay me before the first, take care of minor maintenance up to $50 a month, you're going to save $600 a year. $600 of after-tax money, right? How much money are you going to have to make in order to get $600 to pay rent with? Well, it's going to be more than $600. And that has been a tremendous asset when it comes to what I'm able to do as a property manager. Because not only do I have somebody that appreciates the opportunity, they have been screened properly, lawfully, and then they know that there's something additionally special about this agreement, and it is that they're going to be able to save some money if they pay me before the first. Now, after the first, they're going to have to pay me the extra $50 and then whatever's in the contract legally when it comes to charging more as time goes on when somebody has not paid, that is written into the contract as well. And I'm going to let them know that, but I'm also going to let them know, do not give me rent minus $50 on the first or after. This is a rule. If I allow you to do it once, it is not a rule. This is a rule. Don't expect a discount. So I let them know up front before they've moved in, these are the expectations along with anything else that's in the agreement. And of course, like I said in the beginning, they're going to be smiling. They're going to usually be happy. Oh, yes, 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 yes. But I want to let them know that this is serious stuff. This is a business. I'm going to be amicable. I'm going to want them to have the best experience in this house as possible. However, I'm also here to enforce this agreement should they break some of those rules. This is not a personal thing. This is a business thing. Expect me to expect the extra money if you don't pay on the first. But if you like saving $600 after-tax dollars a year, well, then take advantage of this. I don't want your extra $50 each month. I want you to have that. Enjoy that. Do the things you want to do with it or just have it so that it makes things a little bit easier. Now, I'm saying this $50, it can be whatever makes sense in your market, of course. Now, that alone, what I just shared with you when it comes to pay before the first, you're going to get a rent incentive, and how to handle the minor maintenance so you're not getting called all the time, allows you, if you have screened well and have good tenants in there, to have more than one house and be able to sleep at night and not be pulling your hair out. Now, that doesn't mean that a personal economy that somebody's going to have isn't going to be a challenge at some point. That doesn't then reflect on how they are paying you and things like that. Of course, that is life. But these things helped me dramatically. Like I said, I managed my parents' rental house portfolio, my own. I tried to screen well, and then I tried to let people know the benefits of renting a property from me. So I hope that helps. I'll share more with you in the next video.